This video was brought to you by Brilliant. For most of last year, Russia's currency, the ruble, fared much better than many people expected. Having collapsed to a historic low of 140 ruble per dollar in the immediate aftermath of the invasion, it then recovered to a high of 56 per dollar in April, before stabilizing at about 60 per ruble for most of last year. However, for the past few months, the ruble has started steadily declining, reaching a new low of 100 ruble to the dollar on Friday. This is despite the fact that global oil prices have been rising recently, which usually bolsters the ruble. So in this video, we're going to take a look at what's happened to the ruble recently, why it's declined, and what its decoupling from oil prices says about Russia's oil revenues. Before we start, if you haven't already, please consider subscribing and ringing the bell to stay in the loop and be notified when we release new videos. So let's start with a quick recap. When sanctions were first introduced on Russia in the immediate aftermath of Putin's invasion of Ukraine, many analysts expected them to cripple the Russian economy. After all, these sanctions were unprecedented. They included freezing Russian central bank assets, expelling a lot of Russian banks from SWIFT, as well as individual sanctions placed on Russian elites and even Putin himself. And in the first few weeks, Russia's economy did look precariously close to collapse. In fact, Russia's central bank was forced to more than double interest rates. Russia closed its stock market indefinitely, and Russia's currency collapsed to an all-time low of 140 per dollar. However, unfortunately for the West, the Russian economy and the ruble have actually fared far better than many expected. As I said in the intro, by April of last year, the ruble had already returned to its pre-war level of 70 ruble per dollar, and actually hit a 5-year high in early July, peaking at about 57 ruble per dollar. And the ruble's apparent strength became a popular talking point on Russian state media. Now, this was largely a consequence of aggressive monetary policy and capital controls. But however the Russians did it, it still worked. That being said, in the last few months or so, the ruble has experienced a steady decline and is now one of the worst performing currencies of this year. By January, the ruble had returned from its high of about 56 per dollar to its pre-war levels of about 70 ruble per dollar. But in the months since, the ruble has continued this decline, reaching 80 ruble per dollar in April, and then slipping to a new low of 100 ruble per dollar in the last week. All in all, this means that the ruble has declined by something like 40% against the dollar in the past 12 months. That means that the ruble has even lost more value than Ukrainian currency, which has actually had a pretty good few months. For context, in the immediate aftermath of the war, Ukraine's currency collapsed and its borrowing costs spiked. But in the last few months, Ukraine's finances have improved significantly. Ukraine's foreign reserves climbed to an all-time high of 41.7 billion this month, as financial aid from Western countries continues to flow, and Ukrainian bonds have appreciated by over 50% since early June, making them one of the best performing bonds this year. Anyway, the ruble's decline has caused some consternation on Russian social media, which spent most of last spring bragging about the ruble's apparent robustness. Now, while it's too early to see whether the ruble's decline will cause an inflationary spike in Russia, the Russian central bank is clearly anxious about it. And on Wednesday, they announced that they would no longer be buying foreign currency in the domestic markets. In the announcement, the bank claimed that this decision was about, quote, reducing volatility, but it's also presumably to protect the ruble from further declines. For context, the Kremlin has been buying up foreign currency reserves recently as a sort of buffer to protect against further Western sanctions and guarantee that Russia can still buy stuff even if the ruble collapses. Russia currently claims that it has about $600 billion worth of gold and foreign exchange reserves, which would be the fifth most in the world. But these figures should be taken with a pinch of salt. Russia stopped publishing the allocation of its foreign exchange reserve data in April 2022, after the West froze roughly half of its reserves, most of which were denominated in dollars and euros. And Russia did this both to make it harder for the West to sanction them again and to hide the effect of sanctions. Ultimately, this means that we don't exactly know what's in Russia's reserves, and it's impossible to verify that the Russians actually have as many reserves as they claim to. Nonetheless, it is plausible that Russia does still have significant reserves, despite the impact of sanctions and the exorbitant costs of the war. And that's largely thanks to the sky-high oil and gas prices that we saw last year. Thanks to these, Russia likely replenished some of its reserves by spending some of its windfall on foreign currencies. But the downside is that spending trillions of rubles to buy billions of dollars worth of other currencies is that it obviously puts downward pressure on the ruble. And the central bank have clearly decided that they've either already got enough reserves or that the ruble can't afford further devaluation, hence their recent statement. So, zooming out again, why is this happening? Why is the ruble declining? It's largely because the ruble's value was previously inflated by that clever monetary policy and capital controls that we mentioned earlier, which have mostly now been withdrawn. The Russian central bank, for example, has cut interest rates, and the efficacy of capital controls generally wane over time. It's also probably something to do with the Wagner Group's mutiny a couple of months ago, which accelerated this decline. However, perhaps the most interesting thing this time is around the ruble's decoupling from oil prices. Historically, if global oil prices go up, then the ruble goes up with them. And that's for some pretty obvious reasons. Russia is one of the largest oil and hydrocarbon exporters in the world, so higher prices either mean more foreign currency flowing into Russia or more demand for rubles, which pushes up that currency's value. In the last couple of months, however, the ruble and global oil prices have decoupled. Oil prices have continued to rise, but the ruble has been declining. And this suggests that the G7's oil price cap, which came into force in December of last year, and which prohibits Western companies from insuring or shipping oil for anything more than $60 per barrel, is at least partly working. Well, there's some evidence that Russia has been able to sell at least some of its oil above this price cap. The fact that oil prices and the ruble have decoupled suggests that international oil prices aren't bolstering the Russian economy in the way it used to. This is also probably why so-called neutral countries like India and China are no longer buying refined Russian products like gasoline, diesel, and jet fuel, which are usually more expensive. Instead, they're buying cheap, discounted Russian crude, refining it, and then selling the refined product back to the West. And this would also explain why higher prices aren't helping the Russian economy like they used to. You get the idea then. The Russian ruble is both declining and decoupling from oil prices, which doesn't bode well for the Kremlin. TLDR is all about independent journalism and using facts and data to back up our reporting. And we truly believe in the importance of this, and hopefully you do too. As such, we're brushing up on our data and analysis skills to make ourselves better reporters. And we're doing that on Brilliant. They're the STEM learning platform full of all kinds of courses which can help with improving your career and your understanding of the world. For instance, their hypothesis testing course allows us to better analyze claims and test our own assumptions and theories. Or the Predicting with Probability course helps us to better understand projections and forecasts, allowing us to identify when there's something weird going on with official projections. It's not just statistics though. The interactive and engaging courses over on Brilliant take you through all kinds of important topics, from the worlds of maths, data science, and computer science. Brilliant have also been a long-time supporter of the channel, so if you ever considered checking them out, we'd really appreciate it if you used our link. That way, they'll continue to support the channel, and perhaps more importantly for you, the first 200 people to click the link will get 20% off Brilliant's annual premium subscription. Thanks for watching, and thanks to Brilliant for supporting TLDR.